Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of LME 3-month copper and aluminium.
LME 3-month copper. An interesting hammer pattern yesterday, possibly a dragonfly doji even. This after the previous session's indecisive doji cross. The key recent feature here on my daily chart is still the break below at the start of last week under the lower bull channel line, currently 82.21, of the broken bull channel, currently 82.21 to 93.13, which is highlighted in dark blue. This move below early last week looked as if it might have some legs on it until it reached the same support seen back in late November last year in the 78.50 to 78.60 area, where it turned back up. The question now is whether the market will react the way it did back then and move up to the 85.5 area, because if it did, then the broken bull channel would have repaired itself, at least to some degree. Thus, it all depends now on what happens at the broken lower bull channel line. Above that lower line, we have resistance in various strata, most notably at the flatlining long moving average, currently at 83.77. So far today, a really interesting gapping higher open since filled in, with the market pushing up over the broken lower bull channel line and the January 2021 high at 82.39 once again. LME 3-month aluminium. An immediate countering bullish engulfing pattern and possible hanging man pattern yesterday. This offset the previous session's somewhat reactionary bearish harami and also possible hanging man pattern. In the big picture, we have a number of things going on, all at the same time. There is the big November 2022 to May 2023 head and shoulders top, which initially looked like the possible continuation pattern, but has seemingly turned into a topping pattern. This has a primary target X down in the 2058 zone, with a much harder to reach target X1 down in the 1858 zone. Next, there are the two possible descending triangles and their relevant targets below. The first and larger one is from late February to May action. This utilizes the neckline of the same big head and shoulders top, which is colored in purple, as its base, and that's currently at 22.69. And the late February to date downtrend, also colored in purple higher up, currently at 24.46, to give a primary target X2 below in the 21.78 zone, and a secondary harder to reach target X3 down in the 20.88 zone. Finally, there is the smaller optimized descending triangle highlighted in dark blue on my daily chart, made up from the small late March to early May head and shoulders top neckline, currently at 22.94, and the optimized late February to date downtrend, currently at 23.96, which is entwined with the declining medium moving average, currently at 23.97. This had a primary target down at 22.33, a target that's already been achieved, with harder to reach secondary target X4 down in the 21.74 zone. Finally, there is the late February to late April bearish Andrews pitchfork, a newish pitchfork, but one that seems to be showing the bearish angle of attack of this market. Well, it's shown it quite well so far, with prices following down the middle time, currently at 21.95. This pitchfork is highlighted in bright red on my daily chart. Now, so far today, a slightly lower open, but a move higher, pushing up through the combination of the October 2018 high at 22.67 and the purple neckline. These are actually the first levels of significant resistance overhead that we've seen for a bit.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.